Tesla bulls have been affirming high returns for this stock of the leading electric vehicle brands, and Warren Buffett, while not an investor, has also asserted that Tesla will experience blooming growth for the years to come, perhaps offering a return of 10 times or more than its present stock price. With his fortune, the 91-year-old investor ranks 5th on the Bloomberg Billionaires Index, after Elon Musk, Jeff Bezos, Bernard Arnault, and Bill Gates. He's the CEO of his investment company and is an expert on all things investing. Why does Buffett think Tesla will see such large returns in the future? Keep watching to find out. Warren Buffett began his career as an investment salesman in the early 1950s, but soon founded Buffett Associates in 1956. He took leadership of Berkshire Hathaway less than 10 years later in 1965 and has become a voice of authority on a range of financial subjects. Buffett adheres to several key principles and an investment philosophy that is widely adopted around the world. With his fortune, the 91-year-old investor ranks 5th on the Bloomberg Billionaires Index, after Elon Musk, Jeff Bezos, Bernard Arnault, and Bill Gates. He's best renowned for being one of the most successful investors in the world. As a result, it's no surprise that Warren Buffett's investment strategies have become legendary. As proof of his methods, Berkshire Hathaway has had a stable year, with its stock rising by 15% in the face of rising geopolitical uncertainties. This year, the S&P 500 has dropped 6%. Renowned for being a traditional investor, Buffett recommended in 2017 that investors consistently buy an S&P 500 low index fund. Buy it through thick and thin, especially thin. The S&P 500, which includes Amazon, Apple, and Microsoft, has consistently outperformed inflation over time. Tesla doesn't fit this bill as it's a highly volatile stock, yet Buffett has been known to admit that what Tesla has and is achieving is quite phenomenal, while stating that the competitive innovation is not for him. He might not be a Tesla investor, but he admits that Tesla has only just begun and will achieve greater things. He's quite right on this front. The stock is way too volatile for traditional investors. A single share of Tesla was worth more than $1,000 as of the end of April, equating to a market capitalization of $1.04 trillion. Tesla's stock is now trading at $870 per share. Investors are rather calm about this shift because this seems to be the norm with the stock, and it will rise once more. But why the faith in the electric vehicle brand? Tesla is now the 5th largest publicly traded corporation in the United States and just the 6th company in history to surpass the $1 trillion valuation mark. For investors willing to take risks, though, it's a perfect match. Tesla reported a net income of $3.32 billion. That's up 658% from $438 million in the same time the previous year. The company's profit result is notable since it's by far the greatest in recent history, coming in at nearly $1 billion higher than the company's Q4 2021 net income statistics. In terms of revenue and net income, the results exceeded analysts' forecasts. According to Yahoo Finance, experts forecasted $17.8 billion in sales and $2.26 in earnings per share for Tesla in the first quarter of 2022. As we mentioned earlier, Buffett says Tesla will experience blooming growth. Experts have also affirmed that Tesla has at least another 10 years of development ahead of it. It's just now reaching its inflection point of accelerated rapid growth, similar to how Amazon emerged from the NASDAQ bubble and the financial crisis. Some analysts have gone as far ahead as projecting that the current share price could possibly see a 1,000% increase in the future because far higher returns will be seen by 2030. So we believe Tesla to be a solid investment, especially for long-term purposes. Over the last few months, inflation has been gradually increasing. Consumer prices in the United States are up 7.9% year over year, the largest increase in 40 years. Gas price hikes have been the most significant, followed by hotel, rental vehicle, and furniture price hikes. Stocks are an effective inflation hedge because a company's revenue and earnings should grow at the same rate as inflation. The S&P 500 is a stock market index that tracks the performance of about 500 U.S. corporations. It covers corporations from 11 industries to provide a picture of the stock market's and economy's health in the United States. Without adjusting for inflation, the average yearly total of the S&P 500, which includes dividends, has been around 10% for nearly a century. This fact is why Berkshire Hathaway's bull advised that one of the most effective strategies for new investors to get their feet wet in the stock market is to buy a low-cost index fund that tracks the S&P 500. Rather than picking individual stocks for investment, he believes that the average investor would benefit more from purchasing all of the S&P 500 firms at the cheap cost of an index fund. However, investing in the stock market is much more complicated than this, especially if you're aggressive about investing and the aim is to create wealth and not just store up wealth safely against inflation. The S&P tracks the general market, and low-cost index funds spread the risk of losing money in the economy's fluctuations as it offers broad market exposure and low operational costs, but usually has a low portfolio turnover. If you had invested in Tesla in 2010, for example, you would have paid less than $4 per share, even after the company's 5-for-1 stock split in 2020. By early 2022, the same shares have risen to nearly $1,000 per share. This equates to gains of more than 24,000%. As a result, Tesla remains one of the greatest growth stocks to purchase in 2022, despite the fact that the company is still relatively young. Furthermore, Tesla did not disclose its full year of profitability until early 2021. Unlike most other IT companies, Tesla is still in the early stages of its growth story, said Nicholas Colas, co-founder of DataTrek Research. It's not like Netflix or Facebook, or even Apple, Microsoft, or Amazon in that regard. All of those firms have significant market share, but their growth stories aren't as compelling as Tesla's. Tesla's stock has soared in value over the last decade for a variety of reasons. For example, it's the first car maker to build itself from the ground up and reach mass production in more than 5 decades. Tesla produced over 305,000 electric vehicles in the first quarter and delivered slightly over 310,000. This puts it on a schedule to develop and deliver 1 million electric vehicles by 2022. Investors' enthusiasm for Tesla shares hasn't been dampened by the economic and political background. As investors seek safety in safer investments, rising inflation, stricter monetary policy from the U.S. central bank, and the war in Ukraine have weighed on equities with high valuations this year. Tesla's various business lines, vast scale, growing profit profile, a leading revolution in complicated manufacturing, approach to real-world AI, vertical integration, software stack, and much more are constantly undervalued by conventional Wall Street research, according to the paper. In a note to investors, the firm stated, "According to our multi-year investigation of Tesla's production capabilities and supply chain connections, Tesla is more than 6 years ahead of any competition, and this advantage is growing." If the analysts are to be believed, then one can apply Buffett's investment strategy to the Tesla stock, and that owning a piece of this magnificent firm would not only be one of the finest ways to guard against inflation, but potentially make 10 times returns or even more. Logically drawing from this, the best way to beat inflation would be to invest in carefully chosen growth stocks. Consider growth stocks in the same way you would a bond. Inflation is such a significant concern for bonds because it erodes the purchasing power of your fixed-rate income payments over time. The same is true for growth stocks' predicted future revenue or profit growth. As a result, higher interest rates should affect value equities less than growth companies because the higher hurdle rate reduces the value of future growth. For aggressive investors seeking to invest actively, Tesla could be one of the greatest stocks to add to your portfolio in 2022. Tesla has now become not only the most valuable automobile company in the world, outperforming Toyota, Volkswagen, and Mercedes, but also one of the best-performing growth companies of the last decade. Do you think Tesla stock will see such large returns in the future? Comment down below.